take a glance today. Just take a glance, and you will realize this is something you just don't want to stop at. And a 2-day workshop will never, I mean, not only me, but Kunal will also agree with this, that a 2-day workshop will not just do entirely justice to how much, how much we have to learn about it. So with this, I would now like to introduce Kunal to all of you. He's the founder of Upsurge.club, and along with other co-founders, he has been running this platform for almost 2.5 years now. And before starting Upsurge in 2020, Kunal made a career in equity markets, equity research, and merchant banking. During his stint in the banking industry, he helped multiple companies raise $20 million. And while he was working as an equity analyst, his selected companies gave 8 to 10x returns to the asset management company. So it will be an understatement if I say that Kunal is not only a co-founder, or he's not only somebody who is an asset to the company, but the kind of experience that he comes with, and the kind of conviction and knowledge that he has to pass on to the world today, I think that is something you all must count on. And it's always a pleasure to host him and have him on board. And I can guarantee it that this is going to be one of the most memorable webinars for all of you. So make sure that you make full use of this opportunity, because you never know when again are you getting to talk to him. So ask him innumerable questions, and he has so many surprises in store for you during the session. So make sure that you just use him properly here. I mean, just make profusely and very with a lot of interest, and be active participants here. कोई मतलब इसे शर्माना वो सब नहीं करना है. Ekdam, as friends, let's discuss things, and let's just dive into the world of finance for these 2 days. Now, I think I've talked too much, and I'll hand over the mic to Kunal, please.
All right, Praveen, we've sorted out the YouTube part, right? So it's live on YouTube. I think if anybody wants to, catch hold of the webinar, they can directly do it on YouTube. I do not think that would be an issue. Meanwhile, while we are, streaming it here, we'll make sure that we cater to the queries that come there as well. So that shouldn't be a problem. Those guys have joined in, right?
Yeah, it's sorted.
Guys have joined in, right? Okay, all right. Okay, great. So thank you so much, Priyal. I think she mentioned a lot of things about me, and I wish if I was half of it. So as some of you mentioned, कि stock market से पैसा कमाना है, किसी ने बोला कि basic से सीखना है, so there were multiple things that you guys mentioned regarding the markets, and regarding how you regard or what you are willing to learn from this particular session. First of all, tell me how many of you have been following the recent trends in the stock markets? By a simple raise of hand, the recent trends that you're witnessing in the market, what is happening? Are you witnessing the market to be bullish, the Indian markets per se, or are you witnessing it to be bearish? Or simply the question is, are you really tracking the market right now? My simple question is, are you really tracking the market right now? Simply by a raise of hand, you can do it. I mean, you can raise your hand on the Zoom call, and we'll get an idea. All right. So there are a few people who have done it, who are doing it. All right. Okay, all right. So I think 5 to 6 people have raised their hands. So Aditya, I would like to ask you, what exactly is your thought process, or what exactly do you think how markets are right now? Yes, Aditya, yes, you can unmute yourself. Yes, Aditya, what do you think about the markets right now? Yes, go ahead.
I think the market is really bullishing,
Okay.
perhaps because of the external factors. I think actually I don't have much knowledge about it, but through newspapers, this is what I'm analyzing, that nowadays the
Okay.
market is really going up.
Right.
Earlier, because of the Ukraine crisis, there was some bearishness, but this time we are seeing some of the changes in it.
It was just the Ukraine crisis, or there were other factors as well?
Actually, there were other factors, like the US Fed were increasing the interest rates,
Right.
and
RBI was following it. So yeah.
So this really crashed the market very badly.
All right. And Aditya, what do you think about the US market? So a very different kind of relation has been observed in the current stock market scenario. So the US markets were going down. All right. As you all know, Facebook was down by approximately 60-70% from its all-time high. So the US markets were coming down because the reliance of US markets is solely on tech. जैसे इंडिया में अगर आप निफ्टी और सेंसेक्स को देखते हो तो यू विल सी majority of the companies that are there in Nifty and Sensex, they belong to the finance sector. But when you see the US markets, what will happen? आप उनका S&P 500 या फिर Dow Jones देखोगे, which are the indices which are popular there, you would see that majority of the companies come from the tech background. और COVID के time पे we all know, how the tech stocks, they went 2x, 3x, कोई हिसाब किताब ही नहीं था. So during that phase of 2020 and 2021, we were seeing the tech stocks, taking that bull run, multiplying 2x, 3x of investors' wealth and all those things. And later on, as of now, when we stand, US markets are something that are coming down, but at the very same time, Indian markets are a little resilient. Resilient in the sense that Nifty गिरता है 18,000 से 17,000 होके आता है, but then it bounces back and it comes back. All right. So one thing which I would like to highlight here is because the primary reason, otherwise, given the kind of world that we live in, the capital markets are mostly connected. All right. ऐसा नहीं हो सकता कि एक capital market बहुत अच्छा कर रहा है और दूसरा बहुत खराब कर रहा है. Very unlikely. So this generally happens that the capital markets move in together, as in they go up together, they come down together. But what really happens here is in the case of in this particular case where we are comparing the US market and the Indian market. So US markets are predominantly they comprises more of the tech stocks, and Indian markets right now you would see banks, finance sectors being a part of the major indices that we have. So what really is happening globally is basically the tech stocks are falling down. Even in India, the tech stocks were falling down. They witnessed a good correction and all those things. You pick up Infosys, you pick up TCS, or you pick up the Nifty index for the IT sector. All right. All these things were coming down. All right. So IT was coming down in India as well, and IT or tech as a sector was coming down in the US as well. So that drawdown or that bearish trend we had already seen. But what is happening right now in India is the banking sector is very strong. All right. So the banking sector is super strong, and that banking sector, which comprises 40% of the Nifty, is making sure that the Nifty does not fall, because the results of banks, say for example, the results of HDFC or Axis, of these banks, which form the majority of the indices, the results that are coming out are really good, and because of that, that is being kept on hold. The indices are not falling. So that is one primary reason why Indian markets are resilient and why Indian markets are not falling when we see or when we compare it to the developed markets. All right. So that is one primary factor because of the composition of the sectors that we witness. And at the very same time, as mentioned by Aditya, the interest rates have a very important role to play. So when I say that the interest rates have a very important role to play, the idea is very simple here. Right now, what Fed, RBI, or any other central bank is doing, are they increasing the interest rates or are they decreasing it? Anyone? Yes. Prince has an answer. Okay. Ananya, what is your answer? Okay. Jhalak has a different point of view. All right. Aditya says they're increasing. All right. So see, the one thing that we need to notice here is, or one thing that we need to understand here is how capital really flows, globally. So when the interest rates start to rise, all right, whenever the interest rates start to rise, bonds become very attractive. Why bonds become attractive? A very simple example. Say, for example, previously a bond was giving you an interest rate of 6%. All right, you invest 100 rupees and they'll give you a return of 6% on a yearly basis. That was, a bond that was giving us this kind of return previously. Now, what if that interest rate increases from 6 to 8%? Are you more likely to invest in that bond or less likely? You're investing 100 rupees in the bond and now you're getting 8 rupees in return. Previously, you were getting 6 rupees. Now you're getting 8 rupees. Are you more likely or less likely? All right, you're more likely. All right, you are more likely to invest. Everybody is on the same line regarding this, that, whenever the interest rate increases, we tend to invest more in bonds, or we tend to invest more in safer assets, or that part of the asset class that we have. So now where does the money come from? All right, now the capital in the entire world is limited. At the end of the day, no matter how much it is, the total capital in the entire world is limited. All right, so that is one thing that we need to understand. So since the capital is limited, what we need to understand here is that the capital would be withdrawn from some other asset class and will be parked in this asset class. So what were the asset classes where the capital was getting withdrawn from? Anyone? What were the other asset classes where the capital was getting withdrawn from? On the chat box. Yes. All right. Let's see what are the answers. Okay, just a second. All right. Okay, gold. Somebody has mentioned gold. Somebody has said stock. Somebody has said okay, equities. All right. Okay. So see, the idea is very simple. Whenever the interest rates rise, bonds become very attractive. And since bonds become very attractive, what really happens here is whatever the riskier asset classes are, all right, those riskier asset classes from there, the money starts to, people starts to withdraw their money from there. And the moment they withdraw it from there, they park it in safer asset classes because without taking any risk, that particular bond is giving them 8% return, which is very good, especially in times when the economy is not doing good. All right. So the idea is simple. Capital flow, is pretty simple. You simply have to track the interest rates. If the interest rates are going up, you will see, asset classes like bonds and all these asset classes perform better or quote higher interest rates, and riskier asset classes like equity and all these things, they would tend not to perform well. All right. So that is how it works around. All right. So, and whenever the interest rate starts to go down, so what really happens here is bonds are no more attractive, and people tend to borrow money now. All right, people tend to borrow money now at that lower interest rate, and they tend to invest into asset classes like equity and all those which are riskier, because you're getting the loan or the amount for a cheaper rate. And since you're getting it for a cheaper rate, why would you not take it? And the moment you take it, you invest it in a riskier asset class to generate that extra return. All right. So that is something that is happening currently, and it happens around the year. All right. There are multiple cycles of debt that we can generally notice, witness. You'd always see that in 3-4 years time period, what will really happen is the interest rates would go down, meet its bottom, and then come back, and then again meet its peak, and then again go down. All right. This will keep on happening, keep on happening, keep on happening. And that is how the interest rate cycle moves. And based on those interest rate cycles, the entire economy moves in terms of asset classes, in terms of returns of asset and all those things. All right. So this was something that I wanted to discuss before, we really start the session. So currently, India is in a good position because of the mix of our index, that we are finance heavy, we are banking heavy, and we are on the lighter side towards the tech. But US markets were falling because they were more so heavy on the tech side and less heavy on the other asset classes sides. So this is something that we need to take away. All right. Now let's begin the session. All right. So before we begin the session, there's one very interesting question that we tend to ask everyone. All right. So apparently last time, when, as Priyal mentioned, when we were traveling to Delhi, so we had asked this particular question to multiple people at the airport as well. There were a few people from the UK, there were a few people from the US, there were a few Indians. All right. So we had asked this particular question to multiple people there, and we received some amazing responses. At the very same time, to whatever college we go, all right, we tend to ask this particular question to everyone, so that we get to know what exactly do they really think about money. All right, so the question is very simple. You can simply, put it in the chat box. I want all 100 of us, to participate in this particular thing and write the answers, or whatever you think about money in the chat box. So the question is, say, for example, your age is 30 right now. All right. And if I give you 1 crore rupees right away, all right, your age is 30 right now, and if I give you 1 crore rupees today, what are you going to do with it? All right. Just because you are in a session where we are going to discuss stock markets, do not write stock markets for the sake of that. Write your genuine answer. All right. Whatever you're going to do with that. So if I give you 1 crore rupee today, all right, at the age of 30, say, for example, what are you going to do with it? Everyone on the chat box, let's see what answers you have got, and be a little creative, be a little, honest in terms of whatever you want to answer. So let's try that. Yes, please. On the chat box, everyone. Okay. Probably buy a house. Okay. All right. All right. I would like to invest some amount in gold. Okay. Real estate. Invest in NGO and FD. All right. Real estate property, world tour. Okay. Half investment, half usage. Be a little more specific. Investment, where investment, usage, where usage. Cryptocurrencies. All right. So we have somebody who is interested into cryptos. That is nice. All right. All right. All right. Then we have people who want to, buy equities, mutual funds, invest 50 lakh in 50 lakh in appreciating assets and 50 lakhs for a trip to Europe. 50 lakh का यूरोप का ट्रिप तो बहुत महंगा हो जाएगा. You can do it for 5 lakhs as well. Anyway, okay. Anmol has given a very good diversification by giving us, the answer in percentage terms. So 30% in gold, 30% in real estate, 30% in stocks, and 20% in mutual funds. All right. Ishita wants to invest in gold. Very, Indian in from that regard. Even I would have answered this given I would if I were in college. Okay, make proper portfolio and then I'll invest. Aryan says I'll spend 10-20% of it and then invest rest in different asset classes like equity, gold, and bond. Okay, health, life insurance, land, traveling, gift to family, donate, startup. Okay. You mentioned 30. I should invest some in stocks, which is not carrying very high risk, and others in diversifying assets. So at retirement, I'm thinking about financial freedom. All right. So many people think about financial freedom, right from the word go. So I am expecting some of you, might be thinking that, once you turn 21 and you're out of college and you're doing a job, you would want to get financially free or, maybe 15 years down the line. So you start saving for that, you start investing for that, all those things, you start doing it. But at the very same time, make sure, you invest in yourself as well. So I'm a very big critique of people, who, are very, very frugal in that sense and they only invest. There has to be a very good balance is what I feel. And the right mentality and the right, asset classes that we need to select while we invest. Okay, invest in various areas, some in stocks, some in gold. Okay, rest spend it for myself and family. All right. Okay, FDs. Okay, all right. So I've received multiple answers. Goes without saying. Since I was talking to a very younger crowd, a good number of you mentioned about investing it in stock markets. A good number of you mentioned about doing FDs. Some of you mentioned about buying gold. Gold was something that was very common, is what I saw. All right. By the way, investing in gold is also, a very unique thing. So there are multiple ways through which you can invest in gold, but you need to select the right way. All right. So we'll discuss that some other day, but, make sure that you do it the right way. Explore something that is called SGBs, that is sovereign gold bonds to invest in gold. All right. So that is something that is the right way to go about it, given that your time horizon is on the higher side. But make sure that, you stick to researching about investing in gold before you actually do it. All right. So let's come back to reality. You're not getting 1 crore rupees. So coming back to reality, आपको 1 crore रुपए नहीं मिल रहे, but I was very happy to receive the responses that you guys gave. So we did this survey. We have been asking to a lot of people. So before this survey, whatever answers we received, we have divided in them in a proportion of the way we received them. So 10% of the people said that they might buy a car, 30% said that they might buy a house, 10% said that they'll give it to their parents, 40% said they'll save it for the future, and the rest 10% said that they'll invest in the markets. So when someone said that they'll save it for the future, what they meant here was to do FDs basically. कि वो लोग बैंक में अच्छे से deposit करके रखेंगे. So this were the general responses that we had received when since we have been asking this particular question to multiple people. So this was the common feedback, common set of answers that we have received from everyone. Now this particular thing, save it for the future through bank FDs or through saving account is something that hurts us. Why it hurts us? Because there's a concept called inflation. All right, we all are aware about inflation. Can anybody raise their hand and mute themselves and talk about inflation for maybe a minute? What exactly is inflation? Yes, anyone. It's very simple. We all know it. Okay, Aditya is someone who is very, okay, let's give a chance to Ananya. Yes, Ananya. Just a second. Yes, Ananya, go ahead.
Appreciates. So basically, after 10 years, the value of 10 rupees will not stay 10 rupees. Maybe today we can buy a chocolate for 10 rupees, but after 10 years, maybe we have to pay rupees 20 for that same chocolate.
All right. Makes sense. All right. So the idea is pretty simple. When the same good or the same service starts becoming costlier year after year is where the inflation kicks in. All right. So if you're buying I'll give you a very simple example here. You go for a haircut for guys. I think if you went for a haircut 6 years, 7 years before, 200 was a very good amount that you used to pay. Now that same shop is asking for 300 or 400. So that is what inflation is. All right, when the same service you're getting for a higher price is what inflation is. All right, so that is the idea. Generally in India, since we are developing, the inflation rates in India are on the higher side on an average basis. Right now, you are seeing that the developed nations also have a very high inflation rate, but that is a separate topic altogether. It's an anomaly that we are witnessing. But generally, developing countries tend to have higher inflation rates because we want to focus on growth. And the moment you start focusing on growth, you automatically see inflation being a part of that growth journey. All right. So be it India, be it Bangladesh, be it, China to some extent, or be it Thailand, all these countries which are growing or which were growing at least till the COVID year has some decent rate of inflation that they have been witnessing. So that is one thing that I wanted to speak about before I move to the next slide. So yes, the problem here is, all right, say I have drawn a very simple table, and I'm trying to explain you something here. So say for example, the inflation rate in India is 6%. All right, so you have 100 rupees today, and you are able to buy goods worth 100 rupees with that 100 rupees that you have. All right, that was too much of 100 rupees, but yes. So you have 100 rupees today, and with that 100 rupees, you are able to buy goods worth 100 rupees today. Now, say for example, the inflation rate is 6%. All right. So next year, the real value, all right, the real value of that 100 rupees would be 94 rupees. Why 94 rupees? Because now after 1 year, you will only be able to buy goods worth 94 rupees with that 100 rupees that you had. All right. So this is something that you need to understand, that there are two values of that 100 rupee note. One is the face value that you're able to read on it. All right. So aaj 100 rupee jo hai, you're able to buy goods worth 100 rupees with that 100 rupees that you have. But tomorrow, that same face value of 100 rupees will allow you to only buy goods which are worth 94 rupees. All right. So what has happened here is 6% inflation has kicked in, and it has actually reduced the value of your corpus or of your 100 rupee that you had in your pocket. All right. So that is why people say that keeping money in your deposit, keeping money, cash money, as in, is not advisable because it is losing its value. All right. So on the very similar lines, I have, drawn a table. Now see, everybody, please be with me. The table is visible, right? Can somebody confirm? Praveen or Aniket, anyone? Yes, the table is visible, right? Okay. All right, great. Okay. So, see, at the age of 30, you're receiving this amount that is of 1 crore rupees. All right. Now, since most of the people told us that they would be, doing an FD or keep the money safe in their bank account. So, generally, they would earn a return of 5-6%. Let's stick to around 5%, or maybe, 4.75%. That is the general rate that you receive on your savings account. Now, this is taxable. All right, whatever interest that you earn on your savings account or on your FDs, until unless you're not a senior citizen, it is taxable. And since your amount is 1 CR, the applicable tax rate would be around 30%. All right. So net after taxes, your return from these saving deposits or your FDs would be around 3.5%. All right. I've assumed it to be 3% so that the calculations become easier, but it would be around 3.5%. All right. And at the very same time, you are mentioning that the inflation rate is 6%. All right. Not you, but yes, I have taken it as an assumption that we are assuming the inflation rate to be around 6%. All right. So what really is happening here? Please be very, understand the calculations. These are very basic calculations, but very impactful if we understand things, how the calculations are working. So we had 1 crore of corpus. All right. That is what the amount we can see here. We have received 3% rate of return, or we have earned 3% return on this 1 crore corpus that we have. Now, since we have earned 3%, what is the amount? Anyone? अगर आप 1 crore पे 3 लाख का 1 crore पे 3% कमा रहे हो तो 3 लाख हो जाता है. ठीक है, I've given it out. All right, not a problem. But what is really happening here is there is inflation also, and that inflation has kicked in, and that inflation is eating 6% of the real value of your corpus. All right, that inflation is eating 6% of the real value of your corpus. So you had 1 crore, it increased by 3 lakh. but it decreased in real sense by 6 lakh. So net, what is happening here is you're going down. The amount is going down. All right. You had 1 crore. It increased by 3% because of the return that you're getting from your FD or savings deposit or whatever. But it comes down by 6%. All right. So net, you earned 3 lakh, but you paid 6 lakh. And this 6 lakh is not actually going out of your pocket. So you do not even realize that the money is going out, but it actually does, in the sense that the real value comes down. So basically, after 1 year, despite you getting 1 CR, and despite you making a decent choice of keeping the money in the bank account, you would still have only 97 lakh worth of real corpus. All right. When I say corpus, I mean the savings amount that you had accumulated or that you had gotten from this particular scenario. All right. Likewise, you do not realize this because inflation has kicked in. Inflation is not actually withdrawing the money from your pocket. It is simply, reducing its true value or real value. You would not realize that, something's happening with you. You would simply assume that you have earned a 3% rate of return and that your capital has gone up from 1 crore to 1 crore 3 lakhs. All right. So now you have 97 lakhs. Now, from this 97 lakh, again, next year, what will happen? You might earn 3% of real value, but again, it will come down by what? It will come down by 6%. All right. Again, it will come down by 6%. And the real value of your corpus will come down from 1 CR to 97 lakh to 94 lakh. All right. So it will constantly keep on reducing. Or it will constantly keep on reducing. And by the time you retire, so somebody mentioned that, I am looking for financial freedom. I'm looking for financial independence after retirement. So by the time you retire, this 1 crore of corpus, becomes only 39 lakhs. Or it becomes only 39 lakhs. So that is the problem that in India, generally, that is the notion that we carry. And if you not believe that approximately 1.5 lakh crore of worth of rupees is parked in FDs even today. All right, that is huge. All right, if you compare it with any other country, this number is on the higher side. And when you compare the number of people investing into stock markets through mutual funds or through direct equity, is tremendously low. All right, so that is something that we need to understand, because there's this gap that is missing where we tend to not include inflation while calculating our returns. All right, we are always looking for something that is safe. We're always looking for something that is fixated. But at some point in time, we need to realize that we cannot let our money make returns which are lesser than the inflation rate. All right, so that is something that we need to understand. All right, so one thing is pretty simple here. One idea is very clear here, that you need to invest, and you need to invest in places which gives you a return that is greater than what rate? That is greater than what rate? Everybody on the chat box. You need to invest that 1 CR into an asset class which gives you a return that is greater than the inflation rate or the 6% rate of return that we had seen. और तो 6% से ज़्यादा कमाना है, ये हमको ध्यान देना है. All right. Now my next question is very interesting. Not very interesting, but a basic one. But I would be needing answers from you guys. So we now all of us know that we need to generate something that is greater than 6%. Now, what are the asset classes that give you a rate of return that is higher than 6%? Yes, anyone? What are the asset classes that give you a rate of return that is higher than 6%? Yes, let's see the answers. Equity, mutual fund, stocks, okay, some bonds, all right, mutual funds, all right, equity, corporate bonds, all right, gold, yes, very true, yes. FNO, okay, all right, there are people who want to take risk. Praveen wants to take risk. FNO, all right. Srishti is saying land, which is equated to real estate. And Mol is saying SGBs, again, as an asset class that comes under gold. Then we have Aditya. The answer is bonds and gold. All right. Real estate. All right. Okay. All right. Agreed. All right. Agreed. So yes, these are the few options that we generally tend to have. As you all mentioned, I have mentioned all the asset classes here. All right. You guys mentioned these three in some way or the other. And along with that, you also mentioned gold. So that is there. So we have 4 asset classes, and then we have bank FDs. Now, what we'll do is we'll walk through each and every asset class and see what kind of return we get from those asset classes. And at the very same time, what are the characteristics of those asset classes? All right. So stock markets, we know that if we see the chart of Sensex Nifty right from their inception, we'll see a good 10, 12%, 13% return in our markets, all right, which is a decent return, and we're beating the inflation by 6, 7%, quite a number. All right. But the problems are, there are a lot of problems with the stock market. So the problems are they're volatile, they're risky. They might go down from the moment you buy, they might go down by 20%, 15%. There's a lot of volatility, there's a lot of risk. All right. All those things are there. But the good part is you become an owner of a company. All right. Tomorrow, if you go and buy 2 shares of Reliance, you still are the owner of the company. Not as big as Mukesh Ambani, but you still are an owner of Reliance Industries Limited. And one more thing that I want to highlight here is, when we talk about stock markets, there are a lot of myths that we carry about stock markets. So in terms of myths, we tend to feel that, stock markets are not meant for us. They're meant for people who have very good corpus, or, are HNIs, high net worth individuals. So they're not meant for us is what we generally, carry as a myth. But there's a very, short, interesting story from the book Psychology of Money, if some of you might have read. So there are 2 people there, Jesse Livermore and Grace Gruner. All right. So Jesse Livermore is regarded as one of the best traders the stock markets or the capital markets has ever seen. He made money during the Great Depression. Basically, he shorted the stock market. He betted that the market would fall, and it did during the Great Depression of the the 1920s. So that is where he made money. But during the next recession, he lost all of it. All right. So he was regarded as one of the very sharp traders, strong traders. So at some point in time, definitely, Jesse Livermore was one of the richest trader or investor in the stock markets, but he did not remain wealthy. All right. So he became wealthy. He became very wealthy, but he did not remain wealthy. On the other hand, there was Grace Gruner, a person, who basically did not have a family, and she used to work as a housekeeper. But what she used to do was she used to monthly park some amount in the stock markets, in the US stock markets. And you would not believe, by the time she died, she left a corpus of $7 million. I think, which is not right also, you should have enjoyed it a little, but she left that kind of corpus. So the idea is again very simple. There were 2 people. One was very smart. He invested, he traded, but he lost all of it. The other person was not very smart, did not even know much about the stock markets, but she invested. She remained invested. She let the power of compounding work for her, and she became wealthy. I would rather say she became wealthier. All right. So Jesse Livermore at some point in time had a lot of wealth, but he lost all of it. But Grace Gruner did not, uh, at any point in time did not make a lot of wealth, but whatever she made kept on growing and kept at a good compounding rate. So that is how things work around. All right. So these are some of the myths that we carry, that it is not meant for us and all those things. Stock markets is meant for you and me as much as it is meant for Mukesh Ambani. So there's no stress about that thing. The second asset class that we spoke about, guys, was real estate. Now there's this misconception that we carry in India, where a lot of people in our family, when they talk about real estate, they say that यहाँ पे एक जमीन खरीदी थी, इसका भाव 15 साल में 5 गुना हो गया, इसका भाव 20 साल में 10 गुना हो गया. All right. So we tend to overhear these things a lot while growing up in India. So, but I would like to tell you one thing, that these are only some plots, which, जिसके आसपास development हो जाता है. So once the development starts in around that land, automatically the value of that land goes up. All right. But if you see on an average basis, all right, if you see on an average basis, you do not tend to make that kind of return from real estate. All right. You tend to make 7-8% from real estate. If you talk about Bangalore, it's about 6.7%. If you talk about Bombay, it's about 7.1% CAGR. That is the yearly return that you make from this thing, real estate as an asset class. So the returns on the returns part, yes, it is definitely higher than inflation, but it is somewhere around 7 to 8%. The second problem that we generally see in real estate is it is illiquid. All right. आपने 1 करोड़ का घर खरीदा, खरीद तो लिया, बेचने जाओगे तो आपको लोग ढूंढने पड़ेंगे. You do not get the seller easily. In the case of bonds, FD, in the case of bonds, stock markets, you get the sellers easily on the exchange. All right. So that is one thing. And at the very same time, in real estate, you require, very big ticket size. So somebody said that I'll invest 25% in real estate. Currently in India, you have very limited options to invest smaller amounts in real estate. You need that kind of ticket sizes to invest in real estate. All right. And last point, very important, we all are very emotional about real estate. All right. So मुझे हमेशा ये लगता है, if I had two options, one, 5 crore in my bank account, second, 5 crore worth of house, I'd always go for 5 crore in my bank account. All right. इसका logic बहुत simple है. I've mentioned it here also. If I have 5 crore in my bank account and say, for example, I am earning 10% rate of return. All right. That is about 50 lakhs a year. Using that 50 lakhs, I can easily stay in a rented property that is as good as, as good as what I'd buy. So that is something that I need to understand, that I would not even end up using the entire 50 lakh. I would end up using 10 lakh, 20, 15 lakh at the max to, rent out a very good property. So maintaining that liquidity with you guys is very important when you talk about investments. All right. When you talk about investments. So that is one thing. Again, it's about perception. In India, real estate not only have physical value, but at the very same time, it also has emotional value. So if your emotions if you value your emotions to that extent and you feel like buying a real estate, there's no problem in that. But this is just a mathematical way of calculating things, that you have 5 crore rupees, you're getting 10% rate of return from some other asset class, be it be stock markets or be it be anything else. You're making 50 lakh rupees passively, and out of that 50 lakh rupees, you can easily stay in a very good rented apartment for 10-12 lakhs. You still save 38 lakhs worth of money. All right. So your investment value goes up from 5 crore to 5 crore 38 lakhs, and then it keeps on growing. All right. So able to beat the inflation and at the very same time live in a very good real estate property. So that is something that we need to understand. And likewise, we have bonds and bank FDs. So bonds and bank FDs generally have one thing in common, that is they generate regular cash flows. All right. They generate regular cash flows in the sense that if you are buying a bond which is worth 1,000 rupees and it is quoting a rate of return of 8%, it means that it will give you 80 rupees as interest. अगर 1,000 rupees का bond ले रहे हो तो 80 rupees आपको interest मिलेगा. Likewise for bank FDs as well, if you're doing 1 crore worth of bank FD and you're asking for 5% rate of return, you'll be getting 5 lakh rupees per year. All right. So bonds, FDs generally are lower on risk, but in case of bonds, it really depends where you are investing. What kind of bonds are you selecting? If you're selecting government bonds, maybe on the lesser riskier side. But if you're selecting, say, for example, corporate bond, and with that too, if you go for a smaller cap company, the risk increases. All right. But yes, that is how it is. And generally in bonds, you generate a rate of return of 8-9%, depending on the bond type. And in FDs, you generate a return of 4-5% post taxes. All right. So these are the asset classes that we generally tend to have. Real estate में क्या problem हो सकता है? I've given you my perception. You can have your own perception. There's nothing wrong in that. But yes, I've given you my perception. Now, bonds and FDs में शायद हमें invest नहीं करना चाहिए. उसका एक reason बहुत genuine है. Let's understand this. So, what's the average age of this meeting room? On the chat box, please. What is the average age of this meeting room? All right, great. So somebody saying 19, somebody saying 20, 21. All right. So that is the average age, around 20. All right. So say, for example, you're currently aged at 20. All right. So from here, how many years do you think you'll be working? All right. From here, how many years do you think you'll be working? Anyone? You are 20 right now. Generally, what is the norm? For how many years you'll be working from here? Anyone? 40 years. You have good 40, 35, 40 years. All right. However, there's one thing developing in India, that where people have started to reduce the retirement age. So previously, people used to retire at 60. Now they've started to retire at 55. वो automatically जैसे से wealth आने लग जाती है और retirement age पीछे आने लग जाता है. The idea is pretty simple. It's easier for people to, for some people to make money right now. So, given that the opportunities that they get, of course, so they tend to prepone their, retirement age, given the financial literacy or financial independence they think about right from the word go. So they tend to prepone their, retirement age. So, but yes, all of us have a decent 30 to 35 years at least from here, where we'll be working and we'll be making some sort of income. All right. It would either be business income, it would either be, salary income or any other sort of income, but all of us are, smart enough to make some kind of income. All right, that is the reason why you guys might have made it to SRCC. So, yes. So all of us are going to make some kind of income, that is for sure. So tell me one thing. Would you rely, again, coming back to the old question, that 1 CR which I gave you, would you rely on that 1 crore rupees for your consumption needs, given, in this particular phase of 30, 35, 40 years where you're working? Would you rely for your consumption need on this particular amount? All right. No, no, no. All right. All right. No. All right. So most of the people are answering no, that we will not rely on that. So if you're not going to rely, or if you are not looking for regular cash flows from that 1 CR, आपको नहीं चाहिए कि हर महीने 1 लाख रुपए आते रहे. You do not want that. You're not looking for receiving 1 lakh rupee every month from that 1 CR corpus. All right. Then why go for bonds or bank FDs right now? Because they tend to generate regular cash flows and they tend to be a decent asset class for people who are, looking to rely on their or looking to rely on their portfolio for their consumption needs or any other need for that matter. All right. So that is something that I want to talk about here. The whole idea of human capital. All right. So people like you, me, even me, I'm 27 right now. So all of us have a lot of human capital with us. All right. आप लोग के पास मुझसे 7-8 साल ज्यादा है, मेरे पास थोड़ा सा कम है आपसे. All right. So all of us have a very good human capital with us. So in finance language, when we say that we have good human capital, what we mean here is, right at where you are, whatever your current age is, from that point till you'll retire, that is your human capital. And the more the human capital, the lesser would be your reliance on your portfolio. And the moment you have lesser reliance on your portfolio, you are able to take higher risk with your portfolio. All right. Why? Because even if your portfolio comes down from 1 crore to, say, for example, 95 lakhs, you are able to remain invested with the same securities, and you'd be able to, see the bull run, and you'd be able to see your money going up, beyond 1 crore, and then maybe start giving you returns as well. You would be able to be patient enough, you'll stay patient enough to see your money grow. Also, so that is something that we need to witness here, that whatever your current age is versus whatever your retirement age is, if this period is very long, it means that you have a lot of human capital. And the moment you have a lot of human capital, you do not need to you do not need to be reliant on your, portfolio for your consumption needs. And the moment you're not reliant, the moment you do not have any reliance on your portfolio for your consumption needs, you tend to take higher risk in your portfolio, with your portfolio for that matter. All right. So that is something that we need to understand, that the dependency comes down, and once the dependency comes down, the risk taking ability increases. All right. The risk taking ability increases. So, how I remember this, or how I inculcate this for myself, is in a very simple way. There are two things: capital and human capital. Human capital is how much I'm going to work, and capital is how much I have accumulated. So if my human capital is on the higher side, I can take risk with my capital. If my human capital is on the lower side, I'll not be able to take risk with my capital. Say, for example, if the average age of this room would have been 57. So what would have been the go-to asset classes for those guys? Anyone? If the average age would have been 55, 57. So what would have been the, yes, FD only. All right. Yes, FD, bonds, pension plans, whatever gives you a fixed kind of return would have been their go-to asset class. But for people like us who have a very long human capital or very large human capital, they can take risk with their capital. All right. So that is how you can remember human capital versus capital. Good human capital, higher risk with your capital. All right. So that is how it works around. All right. So the idea is pretty simple. So first point that we inferred was we need to beat inflation, that is 5 to 6% in India. To beat the inflation, we have 4 to 5 asset classes. Not 4 to 5. I'd remove bank FDs from that. I'd add gold instead of that. So we have 4 asset classes: stock, real estate, bonds, and gold. From these asset classes as well, bonds do not make sense for us right now because we are not looking for regular cash flows. On the very same lines, even real estate might not make sense because you're not looking out for rental income from your real estate. All right, you want to work, and if you're working, you'll be earning from that. So you're not looking for rental income from your real estate. So again, that regular cash flow kind of asset class you're not looking for right now. Even when you invest in the stock markets, you might not look out for companies that pay dividends, because right now you're not There's no reliance on that, on those dividends or those cash flows that we're talking about. All right. So the idea is pretty simple. We need to invest where wherever we generate greater returns than the inflation rate. And there are few asset classes that do that. But given the human capital that you and I have, we can easily invest in the riskiest of the asset classes. I'm not asking you to go and buy cryptos. I'm not asking you to go and buy any XYZ company from the stock market. All right. But all I mean to say here is that you can take risk with your capital. All right. In that sense, in terms of asset classes, asset class के अंदर जाके कौन सा आप security buy करो, that is not what I'm saying. But in overall sense, you can definitely, park your money with stock markets, given that you do not have any other liquidity constraint. You do not want to, you do not want to give money to your parents for some emergency health checkup or anything of that sort. Apart from that, if you have, no liability as such, you can definitely use it for a riskier asset class, that is max to max stock markets. All right. So that thing is pretty clear that we can basically go for the riskier of the asset class. Now, how do you invest into the stock markets? What are the ways? All right. आप कैसे कैसे कर सकते हो? One, I would say, आप उसको उसमें म्यूचुअल फंड्स की तरह कर सकते हो, म्यूचुअल फंड्स के थ्रू कर सकते हो. व्हाट आर द अदर वेज टू इन्वेस्ट इन द स्टॉक मार्केट? Direct, indirect. Okay, Prince has given a very good perspective. You can either do it in a direct way or you can do it in an indirect way. So indirect way में कौन से ways आते हैं? Yes, anyone? Okay, IPO. All right. What are the ways? What are the indirect ways through which you can invest in the stock market? Okay, mutual fund, Prince, very good. Aryan has said SIP. All right. Okay. All right. Then there are ETFs also. Somebody has heard this particular term of ETFs. Right. ETFs भी होता है, तो वो भी हो जाता है. ठीक है. All right. And then there's a direct way where you can simply invest through, selecting stocks. All right. So I'll give you a brief about everything. All right. I'll give you a brief about mutual funds. I'll give you a brief about ETFs. I'll give you a brief about stocks as well. So a very weird, thought process people carry, that mutual funds and SIPs are different. All right. ये चीज समझो, SIPs are nothing but a way of investing. So SIP is systematic investment plan. All right. So the first way of investing into the stock markets is through mutual funds. Mutual funds के through आप जब invest करते हो stock market में, so what really happens is they give you a plethora of options. Plethora of options meaning you can invest in a mutual fund that invests only in blue chip companies. Now, what exactly mutual funds are? It is basically a pool where small investors like me, Shyam, Praveen, Aniket, small investors like us, they accumulate some amount and put it in this fund. So say for example, Shyam is investing 1,000 rupees. I'm investing 1,500 rupees. Likewise, Praveen is investing 2,000 rupees. Aniket is investing 2,500 rupees. So all of us, we collect our funds and put it in this. We collect our amounts and we put it in this fund. And this particular mutual fund, it tends to have a manager, a fund manager, and that fund manager, what it does is he invests on our behalf. All right. So the idea is pretty simple. These are small investors. They accumulate their amounts and they invest in this particular fund. And the moment they do that, the fund manager has a decent amount of money with him, which he can invest. And that amount he invests it into multiple securities in the stock market. All right. So that is how mutual funds work. Very simple. Too many investors, mutual fund, and then the investment is being done. So you do not really need a demat account for this. What you can do is you can simply use direct platforms like Grow, Kite, or maybe Paytm Money. So there are multiple products that you can use where you can invest into the in mutual funds directly. All right. So mutual funds में invest करने के दो तरीके होते हैं. There are two ways how you can invest in mutual funds. One is a lump sum. So lump sum is, say for example, you had 1 CR today. You invest that entire 1 CR in one go in some XYZ mutual fund. All right. Or you can buy 4-5 mutual funds and invest 20 lakhs each in all of them. So that is one way. Second is you can go for a systematic investment plan, that is SIP. So what really happens here is that every month you decide a date that on 26th of November, I'm authorizing my bank to deduct 5,000 rupees from my bank account and give it to so and so XYZ mutual fund, and that particular mutual fund will invest it on my behalf. And this will keep on happening month after month till you ask the mutual fund to stop. All right. So that is one way of investing into mutual funds. You do not really need a demat account for this. You do not really need a trading account for this. All right. You simply can buy it using multiple platforms that I mentioned, or you can, take help from intermediaries as well. So NJ Group is one intermediary which is quite famous. Then there's Tata Capital. There are multiple uh, intermediaries which might help you out with your mutual funds. So that is it. And the second indirect way is through ETFs. All right. ETF does the exact same thing. All right. ETF does the exact same thing as mutual funds. Again, ETFs are what? They're funds. They collect money from multiple people, 1,000 rupees from someone, 1,500 from someone, 10,000 from someone, 5,000 from someone, or maybe 7,500 from someone. All right. They collect that kind of money from everyone, and they again make a fund. And then there's a fund manager, and this particular fund manager again invests it into some securities of his choice. Generally in India, what kind of ETFs do we see are, are passive ETFs. So when I say passive ETFs, what I mean here is there's a fund manager. This fund manager is managing an ETF, which is called, say, for example, the Nifty ETF. Now, what exactly he does here is he buys stocks which are in the Nifty index in the exact same proportion as they are there. So say, for example, in the Nifty index, Reliance is about 13%. So this fund manager would invest 13% of the total amount which he has collected into one company, that is Reliance. So we tend to call this particular ETF the Nifty ETF because it is tracking the Nifty index. So tomorrow, if you and somebody from you or me want to, basically replicate the performance of the Nifty index, whatever Nifty generates, I want to generate the exact same return. You can invest your money in Nifty ETF. All right. Where would you find this particular Nifty ETF? You would find it on the exchange. And how can you access the exchange? You can basically make a trading account. Trading account and a demat account with any one of the broker. So our recommended broker is generally done, which happens to be our sister company as well. But the difference that you need to understand between mutual funds and ETFs are, in mutual funds, there are many mutual fund schemes. And at the very same time, not all mutual funds, do passive investing. Basically, the fund manager applies his own brain and then he selects securities. All right. So it might be the case that, the fund manager only picks out 20, 25 companies from the entire Nifty list. All right. So mutual funds are generally on the active side of things. But when we talk about ETFs, they are more so on the passive side of things, at least in India right now. All right. So that is something that we need to understand. So if you want to track any particular index and you want to replicate the performance of the index, ETFs are the way to go about it. But in case if you feel that, this particular fund manager will do really well, you can go for so XYZ mutual fund manager and his particular scheme that is there. You do not really need a demat account for mutual funds, but you do need one for ETFs where so ETFs are generally traded on the exchange. So you can buy and sell ETFs Monday to Friday from 9:15 to 3:30 p.m. But mutual funds, you cannot, buy and sell in this way. You'll have to deal with the mutual fund AMC itself, or the company itself. The company will give you units. You'll have to sell units to them. All right. So these are the two indirect ways of investing into the stock markets. So when I say, these are the indirect ways. In both the cases, you have a fund manager, a very professional fund manager who is managing your money. Generally, I would believe that we are no expert in managing money, or we do not really have that kind of knowledge about stock markets that we can right away go and, start investing on our own. So maybe for the initial years, I would always recommend you guys to, if you plan to invest for a longer time horizon, choose mutual funds and ETFs. All right. That is how even I started my investing journey at 19. I started investing through mutual funds and ETFs. I was doing that. At 22 or 23, I picked up my first stock. All right. At 21, I opened my demat account. At 22, 23, I picked up my first stock. So I waited for good 4 years. I read about companies during my college days. After that, I joined an AMC, as Priyal mentioned, where, I used to research about public markets, about publicly listed companies day in and day out. And that is after doing all all those things. After that, I ended up picking one company in my portfolio. So that is how the entire process worked out for me, and it worked out really well to some extent. All right. So these are the two ways how you can, really invest in the stock markets indirectly. But when you talk about the direct way of investing, you only have, one way. You open a trading demat account with any of the brokers, you see the number of stocks that are listed and pick one stock from it. All right. You pick one stock from it and you'll be able to invest. But the problem is if we include both BSE and NSE, which are the two exchanges in India where generally the stocks are listed. So there approximately more than 7,000, 7,500 stocks are listed. And picking one good company from that is a tedious task. How will you do that? So the probability or the odds are what, one upon 7,500 for you to, pick the best company possible for the next 1 year, 2 year, or whatever. All right. So the odds will never be in your favor, but however, we can, reduce the probability and make sure that things start to come in our favor. How can you do that? Does anybody know how to, really read a company, or maybe what to look in a company before investing? Yes. You might have read random points here and there, so please feel to, put it in the chat box. So we'll discuss them one by one. So what are the ways to, pick out companies, or what are the things that you look in a company before investing in it? Yes, anyone on the chat box? Okay, future projects, revenue profits in the last 5 years, EPS, the financial ratios, the debt to equity ratio, EPS management, debt, FII, DI holdings, fundamentals. Somebody would read annual reports, the past performance, cash flows. Somebody would see the P multiple. Somebody would keep on constantly, watch the press releases that are coming about the company, the future prospects and all those things. All right, great. So these are the things that you would look at. Okay, agreed. No doubt you should be looking at these things. But which would be the first company, at which you start looking out for these things? Which would be the first company? How would you identify that? Out of these 7,500 companies, which would be the first company, which would be the first company based on which you start your research? Market cap. Okay, Prince will go according to the market cap. So Prince will start with Reliance, then go to HDFC, and then go to another HDFC, and then go to TCS. All right. Okay, sector leaders. All right. Okay, high trade volume in recent times. So somebody will go and use the technical side of things and look out at the volume numbers. Mania would go for the Nifty stocks. All right. Okay, great. So, a couple of years back, I read a book by Peter Lynch, and it was a very interesting book. And he spoke about investing. He basically spoke about how investing can be made very simple by simply being observant. All right. So look out at this particular points that are mentioned here. You'd automatically find out, 5 to 6 good stocks, which you should start reading about. All right. I'm not saying that you'd find out 5 to 6 good stocks in which you'll, end up investing, but you would find 5 to 6 good stocks based on which you'll start your research. The first thing is a very simple example. So I've jolted down a few examples here. The first one is, say, for example, if you're going on a vacation or doing some travel for work, what you need to do here is you need to be observant. You need to see how things are working around. You need to see what airlines are maximum available, or which companies are managing the airports. Does anybody have this answers? All right. कौन सी कंपनी के एयरलाइन सबसे ज्यादा यूज होते हैं और कौन सी कंपनी सबसे ज्यादा एयरपोर्ट मैनेज करते हैं? Yes, anyone? Yes. Okay. Anirudh knows the book. Oh, that is really nice. Okay. Anirudh. Okay. Adani is managing a lot of airports. Very true. Very true. So yes. And which is the airlines that is being used maximum by Indians? Or which airlines has the maximum market share? All right. So see, two good companies you guys have already identified. You identified Indigo. You identified Adani. Indigo was a very good bet 5-6 years before. All right. But there were some corporate issues where the promoters got into a battle, and things are not working really well for Indigo as of now. But yes, at some point in time, it was a very good company, and it was just the last 3 years where you'd realize that the company is not doing that great. So this is the idea. See, you identified two companies. You identified Adani. You identified the other company, that was your Indigo. So Indigo is not doing that great. You understand that. But how would you do that? You identified Indigo, and then you did some research. You did some financial analysis. All the points that you guys mentioned on the chat, in the chat box. You'd read about ROI. You'd see about the past projections. You'd see about how the company will be doing in the future and all those things. But you'd at least get a starting point that I need to start reading about Indigo. The second is Adani. So Adani airports come under Adani Enterprises as of now. So Adani Enterprises has done really good on the stock markets. So that is something that, you'd be able to identify by simply being observant. So this is not just one of the things, but rather, there are multiple ways how you can identify these stocks. Even right now, we guys are, sitting in 2022, but 2020, when we started, started moving things from offline to online, the first application that became famous was Zoom. So it becomes a no-brainer that if the stock of Zoom is listed, automatically it would end up doing good. So, we need to be observant, and we need to see what we are using and what things are being used in our surroundings. So likewise, if, say, for example, our house is getting renovated and we need to see, which companies paints are being used the most. All right. So if your answer is Asian Paints, you can, really go through and screen the results, the financials of Asian Paints, and see how the company has done in the past. You would not believe the company grew really well in FY21 and FY22 both. All right. These were the COVID years, and the company ended up doing really well in these 2 years as well. It's very shocking that people don't, we would wonder that people might not have money to eat during the COVID phase, but a paint making company was making profits. The ideology was very simple. So I happened to notice this particular thing back in 2020. People in my neighborhood, they said that ek do mahina yahan se free hai, let's get our house painted. All right, so this was the thought process. All right, so these were few things that we were witnessing at that point in time, and we tend to happen to write it here as well. At the very same time, if you're buying medicines, you can turn the leaflet and see which companies medicines you're buying and all those things. Likewise, if you're traveling to a new city, so we recently happened to move to a different city, to Bombay, and it's been 7-8 months. So given that we have moved here, if we look around, who are the real estate builders, or which company owns the maximum land in Bombay, if we notice all these things, we'll get a good number of companies from from the city itself. Oberoi Realty will get as one of the answers. Godrej will get as the second answer. So these are good companies which we can read about. And likewise, if you're too bullish on EVs, you can definitely look around and see which EVs are being used the most. All right. So right now, say for example, Tata, if we talk about the four-wheeler segment, Tata is being used the most. So Tata Motors has done well. All right. So, but just by being observant, we can identify a lot of opportunities in the market. All right. However, you need to make sure, once you observe and whatever company you identify, once you observe and whatever company you identify, you need to make sure that it is listed on the stock markets as well. Otherwise, you'll not make money from that particular company. All right. So this is something that we need to understand and then apply this particular method of being observant. Now, from the very same branch of being observant, I have one very simple analogy here. Say, for example, if we look around for EVs in the two-wheeler segment, we'll see that not a lot of listed players are there. All right. Which is the biggest player in EVs right now? Two-wheeler segment. Which is the biggest player in EVs right now? Two-wheeler segment. Anyone? No, TVS is not the biggest player. Ather is a part of Hero. But yes, Tata in two-wheeler segment. Ola. Okay. Ola is doing about 20,000 odd scooters a month. Ather is doing about 8,200. All right. So we have three big players right now: Ola Electric, we have Okinawa, and we have Hero Ather. All right. So these are the three big players. Now see, Ola Electric not listed in the market. You are able to see the trend. You want to, basically, you are able to see that yes, Ola Electric is doing well and it is dominating the EV market, but you are not able to invest directly into Ola Electric because it is a private company. Likewise, Okinawa is a foreign company. You're not able to make a direct investment there. Likewise, Hero Ather is something where you can invest directly. All right, Hero is listed in the market, so that is there. But what if I tell you that it is just a beginning? All right, you might not know which company would end up doing better. When we compare these three companies, because it is still at a very nascent stage. All right, Ola Electric has just started, Okinawa has just started, Hero Ather has just started. So all these companies are at a very nascent stage. So you not know which one particular company will stand out like Maruti did in the four-wheeler segment in the past 2 decades. So what you can do here is you can apply the pick and shovel strategy, a very interesting strategy. So these three companies, or any other two-wheeler company for that matter, would require headlamps, would require tail lamps, would require accessories. All right. Apparently, it happens that FEM Industries is one such company which provide these equipments to all the players in the industry. Not all, but majority of them. Ola Electric, it does. Hero Ather, it does. Honda, it does. So there are multiple players to whom FIAM provides these accessories. Now, happen what may, all right, if EVs actually come into play, or if EVs do not even come into play, these things would pick up. All right, these things would pick up, and these are some of the basic things that any two-wheeler would require. And all these big players rely on a company like FIAM Industries who provide with these things. All right, so automatically FIAM becomes a very good choice when you are confused between which company to pick, and there are multiple companies in the same domain and they're fighting for market share, and you tend to happen to identify a company which is providing something to all these three companies. So no matter whosoever wins, Ola Electric wins, or Okinawa wins, or Hero Ether wins, FIAM Industries would definitely turn out to be a good winner here. All right, I'm not recommending it as a an investment advice, but this is how you need to think. All right, so the idea is pretty simple. If you're going for direct investing, look out for trends, or look out based on your observations, think what is going around in the surrounding. If you are able to identify companies that are directly listed, and you're able to read the financials also properly, it becomes a very good way to invest in that particular stock. In case if you happen to see companies which are privately listed, all right, and they are competing for market share or whatever, in that case you need to look around, which one company might be the beneficiary out of this competition, or which one company would be there who would win irrespective of whosoever wins at the top. All right, so FAM Industries is our answer here. Likewise, Maruti has been in a dominant position in the four-wheeler segment, but given that we are moving to EV, Tata Motors is taking big strides ahead. So again, we do not know whether Maruti would win or Tata Motors would win. So again, we need to look around for companies that provide with tire services to both these companies, or airbag services to both these companies. So here you'll identify companies like MRF, CEAT, Minda Industries. In fact, MRF happened to increase by about 30% in the past 1.5 years as well. So this is how things work around. All right, when the moment you are confused and the moment you do not know which one company would stand out as winner, what you can simply do is identify a company which provide some service to both these companies, or to all the 3 or 4 companies that are we are witnessing or we are observing in our surroundings. All right, so this is how things work around. All right, there's a lot to discuss in this particular thing. I'll be discussing about PE re-rating as well, how things work around for ancillary. So these are basically the ancillary companies. All right, ancillary companies meaning कि ये लोग कुछ ancillary service provide करते हैं main companies को. So these are those ancillary companies. Now, when ancillary companies tend to do well, their valuations tend to increase. And how does that work around? I'll need another session for that. So I'll be having it tomorrow. But for now, what we need to understand is, the first way of investing is, indirect investing through mutual funds, ETFs. If we want to go direct through direct investing, we can start being observant and we can see what is happening in our surroundings. If we tend to identify publicly listed companies in our surroundings, well and good, read about them thoroughly and then make an investment decision. In case if you are identifying privately listed players, or in case if you're identifying players which are competing with each other and no clear winner might emerge, so look around for companies that is supporting these companies, and that company in 9 out of 10 cases might end up as a winner. All right, so that is something that I wanted to discuss for today. But yes, P re-rating, then there's one more strategy of scuttlebutt investing, there's one more strategy of the high growth companies. All those things we'll be discussing it tomorrow. But yes, our session would more so now revolve around different strategies and ways to invest in the stock markets and pick companies. All right, so we have done the basic part of things, all right, where we have understood how stock markets really work and the basics of all those things. But now we'll identify some of the ways and methods to pick companies. So in case if you have any queries, feel free to put it in the chat box, and then later on we'll wind up the session for today. Yes, on the chat box, everyone. Yes. Please. Okay. List of bullish stocks. Okay, Aditya, this is a very tough question. Even Manish Kobrai or Warren Buffett might not have this answer. But yes, you can always start with the process. And one of the process I mentioned was, be observant and look around for things that are there in your surrounding, and then maybe bifurcate them in listed and unlisted companies, and also bifurcate them whether you would be able to make direct benefit out of it or not. Difference between ETF and index funds. Prince, there's no difference between ETFs and index funds in terms of return generations. So index funds are mutual index funds. All right, they give you the same returns as the index, they tend to, but म्यूचुअल फंड्स में एक्सपेंस रेशियो जो होता है वो ज्यादा होता है थोड़ा सा. तो से फॉर एग्जांपल इफ यू आर इन्वेस्टिंग 100 rupees through a mutual fund, they might deduct 0.4 rupees from that. But ETFs, you have a lower expense ratio. Say for example, it's about 0.1, 0.2 rupees. So you tend to save that 0.2 rupees in ETFs vis-a-vis index funds. Jalak, if you want to start investing, I think since you're 18, definitely mutual fund SIPs and ETFs are the best way to go about it. All right. How to play for longer and not out of competition. So Aditi, this is a very business oriented question. So the idea is simple, Aditi. There's something called a moat, creating moats in businesses. So say for example, Apple has the moat of iOS and its brand that it has created. No other company has been able to create that kind of brand value, or no other company has been able to create that kind of operating system which Apple does. So that is the company's moat. Moat is basically something that protects your castle or protects your palace. All right, the literal meaning of moat is that. So yes, companies which have very strong moats, are a good investment bets. For example, IRCTC, it holds 98, 99, 100% of market share if you want to book train tickets online. All right, so irrespective of how bad the platform is, you'll have to go to IRCTC to book your train ticket. So that is a company's moat. All right. Okay. Yes. Okay. What about municipal corporation bonds? Aditya, yes, they are a little on the riskier side vis-a-vis the central bonds. So yes, again, could be an investment option, but since you're not looking for regular cash flows, I think should not be your go-to place. How to know whether a stock's price is overpriced or underpriced? Jaspal, very tricky question. So we'll be talking about valuations tomorrow. So make sure that you ask me tomorrow. Make sure you ask me this question tomorrow. Is market being manipulated by FII and DIA? If yes, then individual have any chance to make profit? Ashwin, we should not be, really bothered about what DIIs and FIIs are doing, given that we are in the longer run, as long as 15 years, 20 years, or maybe even 10 years for that matter. All right. At the end of the day, markets would move based on their fundamentals and how things are with the company in terms of its financial statements. So is TCS a must in your portfolio? Not really, Jalak. You can make good returns without having TCS as well. So it's about perception in terms of how the IT sector is doing at large. And in that IT sector, if you want to have the leading player, of the industry. So yes. All right. So I think I've answered most of the questions. There's one more question that I'll take up. Priyal, are you here? Yeah, she'll join it. So I'll take up few more questions.
Yes, I'm here.
Yeah. I'll take 2 questions more and then you can take up. Okay.
Sure.
How mutual funds are the safest option for a person who don't have that specific knowledge about stock market, and is it profitable to do so? Jitin, so mutual funds, that is where the role of the fund manager comes into the picture. Basically, he's investing on your behalf and he knows about the markets. So you tend to know how mutual funds really work, and you tend to know where your money is going through that mutual fund. But that expertise he's bringing on the table for you. So that gets sorted out. But at the end of the day, you need to be patient enough. All right. Nobody can get patience in you. Only the expertise can come in via somebody else. All right. When the FII enters in a particular stock, usually the price starts to jump. Krishna, the idea is pretty simple. So FII be invest karte na. The moment they start investing, they're buying, and the demand starts, getting created. And the moment the demand starts to get created, automatically things starts to go up. All right. So that is the basic norm of demand and supply of economics. Can we see recession soon? Jaspal, I don't think India will see any kind of recession, at least in the coming 1 year, 2 years, because we are in a very good spot, to be very honest. All right. Vis-a-vis other countries, the developed nations are, have gone for a toss. All right. Priyal, you take over from here. I think I've answered most of the questions. In case if anyone has any other question, feel free to ask me tomorrow. And as mentioned, you'll be receiving your certificates once you finish the session tomorrow with us. So yes. So make sure that you have a lot of questions tomorrow and we can discuss them one by one. Yes, Priyal, over to you.
All right. Thank you, Kunal. Thank you to everyone else who's been very actively into the session, have answered questions asked by him, or probably asked him questions, which is even a greater deal to do. So I hope this was very fruitful for you all. And next up, I have in the chat box shared a link wherein you can sign up. So make sure कि आप वो link पे click करो and do sign up. And before that also I'll suggest that do check out our web app, www.upsurge.club. And once you want to sign up, you'll understand. Sorry. I thought somebody interrupted. Okay. So you might just go and check out the courses that we have to offer, especially when you are reading about and learning about stock markets over here. And tomorrow, like Kunal mentioned, we will be also covering valuations. So check things out, read beforehand also before you come. Be a little prepared about what we are about to, learn tomorrow. And that's about it from my end. Your discount coupon will be shared with you tomorrow once the session is covered entirely by us and you together. And that's about it. If there are any more questions, you can leave them on the chat box right away. So abhi jitna we can cover, hum kar sakte hai. Otherwise, you can also leave your queries to Varda ma'am or the co-hosts. That is, we have Manish, we have Bharti, we have Ayushi, we have Aniket. So we all can get in touch and get your queries answered. और जो भी web app के related queries होगी कल by the end of the workshop, that also will be covered by us. And also a special thanks and a very heartfelt gratitude to the faculty who has joined us today, Faculty of Commerce and Management of SRCC. Thank you so much for being here, and see you all tomorrow. Any student who wants to wrap up the event, or else we can leave the event?
Yeah.
So now we have come close to the end of the session. Thank you, Kunal sir, for the valuable session today. I really hope all the participants have learned a lot today and have something to take away with them from today's session. Next, I would like to thank you, the college authorities and Varda ma'am, for such great opportunity. I would also like to appreciate our team SQAC, who have worked hard to make this event happen. Last but not least, I would like to thank all the participants for their time and enthusiastic participation. We'll be back tomorrow with day 2 of the stock market webinar. Thank you all. Now you may leave the meeting.
Okay.
Thank you.
Aditya, so we'll definitely come to SRCC soon. I think we'll definitely plan something offline. So even we have a very good one-to-one interaction when we are offline. But I think today's session was good enough to, give a heads up and for us to know each other, to get acquainted with each other. And the moment we come there, we'll, take it from where we leave it tomorrow. So yes, Aditya, please save your questions for tomorrow. Do not really worry. I'm here only. I'm not going anywhere. In fact, we'll give some extra time tomorrow to make sure that, most of the questions are answered. And at the very same time, whatever we discussed today, you can go back, read about it, come back with questions, try to prove me wrong at any point. I'd really enjoy that. So please feel free to do that and make sure that you come with a lot of questions tomorrow and any expectations in case if you have from where where we want to take the session ahead. So thank you so much. Thank you so much, Aniket, for having me on day 1. I'll make sure that we have a good interaction tomorrow as well. Thank you.
Thank you so much, sir, and thank you so much all the participants.